Hi everybody, this is Bredin of Kennedy Industries, and today I'm checking out a theorycraft video and we're going to do a little bit of a markup and look at some statistical analysis, and the subject is opposite extreme first. Now, a number of years ago I was looking at how candles formed and the price action underlying candles, particularly big candles I was looking at, to see how I could trade them to get the most use out of the range that they offered. And so I was marking up a chart very much like this one, which is just a GU chart. The chart itself is H1, and the larger candles you see here in the green and red are daily candles. So what I'm examining here is the daily candles, and I'm using the hourly candles to show me where the high and the low occurs. And as I was marking up these candles, I noticed something in particular. That is the process of a candle creation being about 4 data points: the open, the close, which are fixed points at the beginning and the end of the time frame, and the high and the low, which occur in the middle somewhere. And at some point a candle must travel from either the high to the low or from the low to the high, essentially unobstructed. It just goes from the low to the high. And is there a way of finding this and benefiting from it? And so I just started by marking up a chart, and there's going to be a video later on markups as well. And we can just run through some candles here and see that we get the low goes to the high, and we get this one here. The low is first and then the high. Here the high is first and goes to the low. Here the high occurs before the low, and here the high occurs before the low, and here the high occurs before the low, and here the low occurs before the high, and here the low is before the high. We've got here low to high, low to high, and by now you can probably see the pattern occurring. And that's the sort of thing I noticed after marking up a few pages of these. Many charts were marked up like this, or very similar to this, and I noticed that for the most part, green candles, the low occurs first, and on red candles the high occurs first. And I thought, oh, I wonder how often that happens. And it turns out it's quite a significant amount. But this process actually forms the basis of Brookmeyer's open filter, where he allows the extreme to occur first and then price to close back over the open, and then you can trade away from the open. And you can see on how many of these candles here that becomes a pretty powerful thing to do. And from this idea we can go looking for high time frame extremes that we can trade away from and try to get most, if not all, of that candle's movement, the full range available to us. And when those extremes happen in good places with good timing, you get really powerful trades occurring. And so when I got out the statistical analysis for this, and I took a statistical analysis to it, and what I've done here, this is the NU. I'm looking at hourly candles and using the 5-minute candles to find the high and low in exactly the same process I did here by eye. I've done programmatically for the indicator, and it's, as I said, it's searching for where the high and low occurs within a hourly candle. I had intended to do 6 of these examples, sorry, not 6, 10 of these examples, but on 4 of them I got those stupid fucking MT4 data gaps, and I couldn't be asked fixing them. just way more effort. I've got enough examples here. You can always go on to sanityindustries.net, grab this indicator and download it and run the analysis yourself. So here we have basically where the high or low occurs, and finally the key point on this is the total OEF down here, how often opposite extreme first occurs and is true, and we've got here 86.5%. It turns out that it's 85 to 90% of all candles, and all of the fails are small-bodied candles, which I arbitrarily defined as being 1/3 of the total range of the candle or less. And I thought I had an indicator which actually showed the fails as the fail rate of and how big the candle body was and stuff. But I've either thrown it away or lost it, or I didn't code it in the first place and I've totally missed it. So moving on to EU, here we come into about 85% of all candles, high and low. Again, hourly, using the 5 minute to search, just in case. So we'll get away from sort of major pairs and we'll look at gold. Again, hourly candles on gold, 85%, no problem there. It's a statistical sample of 500 bars, so it's pretty robust. And we're doing it across multiple pairs and getting roughly the same result each time. So I'm liking this as a robust result statistically. This is gold, so this isn't even a 4x pair. We go on to use the Singapore dollar, and we come up with the same number again, 86.5%, or 86% even. All right, so moving on to, so let's get US dollar out of the pair, so just so we can cursorily, that's not even a word. So we can get rid of the US dollar as a potential thing. Just a buy eye again, 85% between EJ, I should say. And finally, I'm going to go to the UCAD, and I'm going to do it H4 candles instead of H1 candles, and I'm going to use the 30-minute to find the higher and low. That's why there's a different number up here, because there's 8 30-minute candles, and I've numbered them from 0 because that's how programmers do things. And we come up with 90%, so that's the high end of the range that we expect to find. Now, as I said, this occurs at roughly these percentages no matter what time frame you look at. I could do the same thing with weekly candles, and I will come up with the same answer. I wonder if I can just really quickly do that here. I haven't vetted the data and make sure I don't have ridiculous data gaps and stuff like that. I don't know that I could go back 500 weeks and come up with it. So I might only go back 250 weeks if I'm checking weekly candles. Ooh, what are they? Weekly candles are 1080. Ooh, I've got to remember that. And how about I use daily candles to try to find the high and the low? This might fail just based on that. As I said, I haven't really even looked at this. I don't know that I've got the data available for use. And a little surprisingly, right, so we know that this is, right, so weekly candles that are 5 days in a week, right, where the opens occur. Look at that, we come in between the 85 and 90, so as I said, I haven't vetted the data, that's not cursory, but we come up with the expected result, which is a good sign. So if we were going to trade weekly candles, we might look at this and we can see that vast majority of cases the high happens early in the week, Monday or Tuesday. One of my students pointed that out a while ago, and it's ridiculous and obvious. So you're looking for the high or the low of the week to occur early, and then guess what? We know that in 85% of cases, that high or low set on the Monday or Tuesday is going to be the high or low. We can trade opposite extreme first. We can expect price to come back over the... it's either going to keep going because you've got momentum for the week and be annoying, or it's going to close back over the open and go the other way, and it'll be awesome. We can trade back from that extreme if it's at a good place on the chart. But how far can we go? Well, here's another indicator I wrote a long time ago, and all it does is take like the average daily range, literally just the high to low for the last 21 days, the weekly for the last 52 days, the monthly for the last 12. Those are settable. It's available for download at insanityindustries.net. Bit of self-promotion there, but yeah, what do? I've written a decent indicator and people should use it. And we can see here that if we were to trade monthly candles for the EN, there's 1,000 pips a month on offer there. I can find the low and trade back. I mean, we've got 950 EA. We get down to I think this is working out what monthly candles offer you at least 500 pips. Here's GU, 570 pips. I'm sure you can make some money with 570 pip ranges available on the monthly. 270 pip weekly ranges. I'm sure you can make some money trading from an extreme here, knowing about opposite extreme first, knowing how far things are going to go, and trading from an appropriate extreme, which is happening in the right area of a chart. Finding those right areas is a subject for another day. But there we go. There is opposite extreme first. In a nutshell, there it is. And this has been Bredin of Insanity Industries, helping you make more money by sucking less.